Welcome traders to another Tick Mill trading update with me, Patrick Munley. Want to take a look at the S&P 500 using the emini futures contracts and put together a potential trading plan for the day ahead. So where are we up to? Well, yesterday, econ data out of the US has spooked the markets with respect to amping up recession fears as manufacturing data came in on the weak side. There was also an issue with jobless claims, and we are heading into non-farm payrolls this afternoon. And that's if that comes in on the weak side, I would suggest that we are going to extend to the downside into the weekend. We also have geopolitical tensions soaring with respect to Iran and Israel, and that is also a concern for investors and traders alike, with potential gap risk over the weekend. So we are seeing some risk positions being squared ahead of the weekend here. From a technical perspective, we have our third week of declines potentially underway here. The key level for me on a weekly closing basis is if we can close below the 54.20 handle. If we do, that will be a confirmation for me on the daily time frame then that we have a double correction in play. As I mentioned yesterday, that was the danger zone that we traded into at the 55.74 into the 56.10 area, being the 50 to 61%, 61.8% retracement of the prior decline. So the double correction scenario for me is increased in probability if we get a close today below the 54.20. We're currently trading just below there, and so what I'll be looking for then would be a downside extension into the beginning of next week to target the equality objective into the 53.08. This also represents monthly projected range support as well. So from there, I think then we could see a more meaningful bounce and corrective move, potentially targeting back into the 5500, 5510 area. Looking at the intraday charts, the intraday bull bear zone is going to be this 54.25 to 54.35. As we remain below there, the first objective on the downside today will be into the 53.67 to 53.57. That could be a bounce zone to retest bull bear zone from below. But again, I would anticipate that sellers will be lined up there. And my target now, was we hold that bull bear zone as resistance, is going to be down into the 53.20 to 53.10, which is the equality objective. And like I said, monthly projected range support. And if we trade into that area, especially into Tuesday, I would then be looking for a tradable local low to be put in and around of next week. And like I say, then we can start to think about retesting the 54.20 to 54.30 from below. And if we can get that through there, then we'll target and move up to the 5500. That's going to be for next week. For today, focus is really just about the close and whether or not we close below the 54.20. That's going to be pretty pivotal on the weekly and the daily time frame specifically. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.